Hello there, this is FairBinaryOptions.com and this is the US dollar Japanese yen, the 4-hour chart. Now, like the name suggests, we are interested into buying put options on the US dollar Japanese yen, and the reason for that is that price just broke out a rising wedge. You might say, okay, but if it already break out of a rising wedge, why still buying put options? Well, not necessarily buying here. A retracement will be something welcomed, but I would like to show you the analysis for the last move higher. And the last move higher, from my point of view, started here on this move to the upside, and it has the shape of a rising wedge. Now, a rising wedge travels between the 1 and 3 and 2 to 5 trend line. This would be the 1 and 3 trend line. This would be the 2 to 4 trend line. And it is not mandatory, but usually the 1 and 3 trend line, it is being pierced by the 5th wave. So this should be wave 1. This should be the 2nd wave. All these move to the upside should be the 3rd wave. The 4th wave here comes and pierces this, the end of wave 1, as you can see here. 1, 2, 3, 4. And then we are looking for a 5th wave to the upside. 1, 2, 3, 4, 5. And there you go. We have a nice rising wedge. This is being called. Now, from this moment of time, this 5-way structure to the upside actually marks the end. So from this moment on, the end of a wave of a bigger degree. I would say a 5th wave, of course, of a bigger degree, of an even bigger degree. And if that is a 5th wave, then it means that the previous wave here would be a 4th wave type, of course. So rising wedge, and then we have a 5-way structure for the 5th wave to the upside. Now, from that moment on, I would say that we have here a nice A, B, C. This one looks like an elongated flat. Not only that it looks like an elongated flat, but the B wave here retraces more than 100% when compared with the previous wave A. So this, I would say, that is only wave A. Here, and the B wave here, and the C wave to the downside. So, A, B, C. What to look for next? Well, we are looking for a retracement that should come in the form of an X wave. That means a corrective wave. Ideally, to go somewhere into the 104.90 area, something like 60 pips higher. What I would do then in the 104.90, okay? So 104.90, I will buy put options with end of week expiration date. If it comes today, this is Friday. If you look on the lower right of the screen, this is Friday, the 3rd of January. And if it comes today until the New York close, I will buy put options here, 104.90 area. I will buy put options with end of week expiration date. Okay, so end of week expiration date. That means even for today. If it comes next week on Monday or Tuesday or Wednesday, still end of week expiration date, as the move to the downside most likely will imply another leg lower ideally of the same degree. So I'm looking in the end to have something like this. And by the time the X wave is completed there, to have something like this as well, for price to go even lower, 103.56, or price to go even 161.8 when compared with this one. So even something like this. Now it remains to be seen. I would say that we do have a five-way structure completed to the upside on the US dollar Japanese yen, but the move to come here, I would say it is only B wave type, not an impulsive move. So as a consequence, let's just write on the screen that we are looking to buy put options when price reaches 104.90 area with end of week expiration date. So regardless when this is happening, we are buying put options, end of week expiration date, and that is our strategy for the US dollar Japanese yen for the rest of for the next move to come after this five-way structure. Thank you very much for being here. This is FairBinaryOptions.com, and all these analyses and recommendations are possible due to the help of our sponsor, Lionite.